Good day, everyone. Today I'm going to present a lecture titled Business Valuation Techniques and Strategic Applications in a Global Context. Through the session, we will explore various techniques for valuing businesses, the role of data in these valuations, recommended tools for effective analysis, and finally, global trends in valuation with a specific focus on Samsung Electronics as our case study. This presentation will not only focus on theories, but will also incorporate data visualization to make our understanding clearer and more practical. To begin, let's understand what business valuation really means. Business valuation is a process of estimating the overall economic worth of a company. It considers assets, liabilities, and the potential for future earnings. Valuation is critical for many business decisions, mergers and acquisitions, fundraising, IPO preparations, and even internal strategic planning. Several methodologies exist. The income approach looks at expected future cash flows. The market approach compares the company to industry peers. The asset-based approach values the net assets of the company. And lastly, the residual income approach evaluates value beyond expected returns. Ultimately, valuation requires a balance between hard data and professional judgments. Understanding why business valuation matters is essential. It supports informed decision making by company leaders, guides capital allocation, and helps formulate growth strategies. Accurate valuations build trust with investors, lenders, and other stakeholders, ensuring that companies attract reliable and long-term investments. Valuation is also critical during M&A negotiations, helping both parties agree on fair pricing and avoid disputes over value. Furthermore, valuations support regulatory compliance and align companies with international financial standards, ensuring transparency in reporting. In some cases, valuations even play a role in legal disputes or tax plannings. Now let's discuss the importance of data in valuation. Data is the backbone of any valuation process. Accurate data enables reliable valuation outcomes, while poor quality data can severely distort company value. A proper balance between historical data and predictive data is vital. Historical data like sales, earnings, and operating costs helps validate trends. Predictive data, such as expected market expansion and growth projections, informs forward-looking models. This chart here is supported by Samsung's key ratios. For example, ROA and ROE in recent years demonstrate the importance of reliable data in valuation. These data points reflect operational efficiency and profitability trends over time. By integrating such data, companies can enhance scenario planning and prepare for different market conditions, increasing the credibility of their valuation models with stakeholders. Moving on to the methods of valuation. The income approach, which includes methods like DCF, FCFE, and FCFF, focuses on forecasting future cash flows and discounting them to present value. The market approach benchmarks the company against industry peers using ratios like PE or EV to EBITDA. The asset-based approach values assets and liabilities at fair market value, especially suitable for asset-heavy industries. Lastly, the residual income approach focuses on returns that exceed the required rate of return. It is often best to use multiple methods to increase accuracy and validate results from different perspectives. To perform effective valuation, having the right tools is crucial. Excel remains fundamental for building financial models and running scenario analysis. Bloomberg Terminal provides real-time financial data and peer comparison insights. Capital IQ is excellent for accessing transaction data and industry analytics. Python and Tableau automate data processing and enhance visualization, turning complex datasets into actionable insights. The choice of tools should depend on the complexity of the business and the data requirements of the evaluation tasks. Let's dive deeper into tool selection based on business complexity and scope. For single businesses with low complexity, simple tools like Excel, Google Sheets, or Canva suffice for financial modeling and visual reporting. Growing companies with multiple business units benefit from tools like Tableau or Power BI to visualize KPIs across divisions, and platforms like QuickBooks or Carta for automating accounting and equity management. Global corporations like Samsung require advanced tools, Bloomberg Terminal and Capital IQ for market tracking, Python and Tableau for automation, and ERP systems like SAP for enterprise-wide data integration and reporting. Similarly, we can select tools based on company size. Startups with 1 to 50 employees benefit from lightweight tools like Excel and Canva for quick decision making. Growing SMEs with up to 200 employees need more robust visualization tools and automatic accounting system to scale effectively. Mid-sized enterprises require solutions like Capital IQ for market benchmarking and Tableau for data dashboards. Finally, global corporations with over 1,000 employees depend on integrated systems, Bloomberg Terminal, Capital IQ, and advanced ERP tools to manage complex global data and support strategic decisions. Let's explore current global trends in business valuation. There is an increasing shift towards future-oriented models like DCF, FCFE, and FCFF. These approaches focus on growth potential rather than solely past performance. Scenario planning has become essential, especially in volatile markets. Companies model optimistic, base case, and pessimistic outcomes to prepare for uncertainty. Referring to Samsung's income statement, we see that revenue dipped in 2023 but is expected to recover in 2024, demonstrating the importance of forward-looking models. Investors increasingly prefer valuation that anticipate industry disruptions and technological innovations, as reflected in Samsung's focus on predictive modeling for semiconductor cycles. Another major trend involves recognizing control premiums and marketability discounts. Control premiums represent the added value of decision-making power and acquisition, while marketability discounts account for liquidity constraints, especially in private firms. For complex corporate structures like Samsung's, tailored adjustments are essential to accurately reflect the value of diversified operations. The current surge in global M&A activity makes it even more important to monitor deal multiples and valuation benchmarks actively. Now let's apply these concepts to Samsung Electronics. As shown in Samsung's financial position, their growing asset base demonstrates resilience even in volatile markets. In addition, key ratios such as ROA and ROE reveal that while profitability dipped in 2023, there is a clear recovery trend in 2024. Samsung's capital-intensive sectors, including semiconductors and display technology, make robust DCF models especially vital. Monitoring control premium benchmarks ensures Samsung accurately prices future M&A deals and joint ventures. Scenario planning prepares Samsung for global uncertainties like COVID-19 disruption and geopolitical risks. More importantly, data-driven internal evaluations build trust with global investors and support Samsung's long-term leadership in its industry. To conclude, my analysis today reflects the trends and recommendations I explored in my discussion post earlier this week, emphasizing the use of forward-looking cash flow models and the strategic consideration of controlled premiums, both of which are critical for Samsung Electronics. Business valuation is an essential strategic tool. It combines data analysis, market insights, and professional judgment to guide decision making. Global trends are shifting toward forward-looking, integrated valuation models that emphasize flexibility and resilience. Accurate valuations help companies like Samsung strengthen their market leadership and make informed strategic choices. Finally, as companies grow and markets evolve, continuously investing in advanced tools ensures that valuation remain accurate and reliable. For this presentation, I have used a combination of academic and practical sources. These include insights from EY, Harvard Business School Online, Investopia, and a video lecture by Moore. In addition, the financial data visualization and matrix come directly from Samsung Electronics' official investor relations website. Thank you so much for listening.